Good evening, everyone. Time for another silver update. Now I'm going to go to the charts here because that's going to be the main story that we're going to talk about. But first I want to just do a quick update on this Social Security story here that's over on Zero Hedge. Welfare Nation alert. Disability fund to run out of cash in 2 years. It's actually much worse than that, but let's read this. Back in 2010, America's primary retirement vehicle, the Social Security Trust Fund, did something it had not done in three decades. It went cash negative, meaning that the costs were greater than the payroll tax revenues as a result of both the Second Great Depression, which sent the costs soaring, and America's demographic Japanification as baby boomers started retiring by the tens of thousands with every passing day. Now this chart, you can see this is the Social Security cost and revenue. It's went in the red. You can see that right there around 2010. And this is only going to accelerate as the baby boomers retire. This prompted a firestorm of analysis, each framed by the ideological bias of its author and each eager to calculate how much time the Social Security Trust Fund has before it runs out of cash, and with it exposes the lie that America's welfare dream for current and future generations of workers. Now, if you remember, it wasn't too long ago that they were telling us things like, well, they're going to run out of money by 2050, or we need to do something. And everybody knew this is going to accelerate. It has accelerated. It's already upon us. It's 2015. Somehow 30 years just disappeared. Continuing, the good news is that with combined grand total of $2.8 trillion in assets as of December 14th across its various trust funds, a shallow cash burn rate meant that there are probably at least 2 more decades of funding left in Social Security before the above-mentioned dreaded moment arrives. Now, $2.8 trillion in assets. Where? Where are these assets? These assets are treasury bonds. There are no assets. If the Social Security Trust Fund had assets, then they would have invested in stocks or companies or real estate, something of tangible value. But to actually buy bonds, treasury debt, and swap it in there, that money's not there. It's having to run directly out of cash right now. The bad news is that if one digs a little deeper, something scary emerges, namely the Social Security Disability Insurance Fund, SSDI Trust Fund. For those unfamiliar, here is the official description. The Disability Insurance Trust Fund is a separate account in the United States Treasury. A fixed proportion, dependent on the allocation of tax rates by the trust fund, of taxes received under the Federal Insurance Contributions Act and the Self-Employment Contributions Act are deposited in the fund to the extent that such taxes are not needed immediately to pay expenses. Taxes are deposited in the fund on every business day. The trust fund provides automatic spending authority to pay monthly benefits to disabled worker beneficiaries and their spouses and children. With such spending authority, the Social Security Administration does not need to periodically request money from Congress to pay benefits. Well, that's going to change really soon. So we get into the charts here, and you can see this circled area, or I'm sorry, the red square area is the disabled, and you can see the growth in that. Practically nothing. In fact, all of these are practically nothing. Back at the beginning of the financial crisis, they've all just grown unbelievably. Here's a chart, SSDI applications per 1,000 adults and U.S. unemployment. So you can see how they track. And this chart is a change in the Disability Insurance Trust Fund assets. You can see right there, when the financial crisis hit, this thing went promptly negative and has stayed negative. So, and then this chart, and here's why this is a problem. And you can see that. The chart above the red line shows the total program expenditures, which has soared at a pace far greater than the level of receipts, which has been largely flat over the past decade. How much of that is due to criminal abuse of SSDI is unknown, but surely a sizable amount. Now, I've covered this before, but you have to remember, they're paying money for people who get their kids to be diagnosed AAD or AADD, or well, I don't even keep track of all those stupid classifications that these phony quack doctors come up with so they can prescribe a whole bunch of big pharma drugs to children. It's insane, it's criminal, it's wrong, but that's what's going on. So there are people who actually are trading their children's health by getting them on these drugs. Of course, the only way you're going to be able to get this benefit for your children is if you put them on those drugs. It's a deal with the devil. But anyway, so the abuse is enormous. And then this last chart, that's really not important. So let's read the summary here. Is anyone really surprised that the pyramid scheme supporting the entire developed world is finally being revealed for all to see? So there's not much time left in this thing. It's not going to go very much longer. The economy's not recovering and things aren't getting better. So this doesn't have much longer to go. I don't know how they can keep kicking the can down the road. Now, I wanted to get to the main story of the night, and this stems out of the discussion that we had talking about Belange P and people like FOFOA and others that talk about how silver is different than gold and why gold is a better investment, some people say, and silver is less. And I wanted to dismiss that myth, hopefully once and for all, but we'll see. So we're going to start off with this article from Peter Cooper. It's back from 2012, but basically the logic is correct. And I'm going to show you the logic. Then I'm going to take you to some charts and show you why this is the case. So let's start here. Of all the charges we've heard against silver recently, the one that annoyed us most was that silver is just a semi-precious industrial metal and that therefore gold is now a better future insurance policy against money printing by the central banks. Now just hold on a minute. Look back over the past decade or so at precious metal prices. Is it gold or silver that has given an investor the best return? Silver wins by a mile, with gold up a maximum of 7 times to silver's 15 at its recent high. Well, he's going from the recent high. Where we stand right now, we're talking about silver up 5-fold, roughly, from where it was in 2003. Volatility warning. That outperformance comes with a volatility warning. However, silver moves up and down like a yo-yo, but the trend line is still straight up, and that line is steeper than for gold. Now, that's not true anymore either, but it's still, in my opinion, is still in an uptrend. Silver has been a better investment than gold. It is more precious, not less. True, silver is used in industrial processes more than gold that only really has more limited dental applications like keeping this writer's front teeth in place. That makes silver more vulnerable to a downturn in the industrial cycle. Or you might think, actually, that's not true either. For when industrial production turns down, so the producers of copper and zinc reduce their output, and most silver is produced as a byproduct of mining copper and zinc. Thus, if industry slows down, there is less silver produced, and the reduced supply compensates for the reduced industrial demand for silver. Of course, the investment demand for silver is then the prime determinant of price, and that is what has been growing over the past decade or so. Gold and silver are linked at the hip as precious metals, and the available reserves of silver are a fraction of those of gold. So when the price of gold goes up, the price of silver goes up proportionately higher because there's a smaller supply. Also, as gold goes up in price, investors turn to a cheaper alternative. So this article clearly demonstrates that silver has not only behaved like a precious metal as an intrinsic store of value for more than a decade, but done so better than gold, and that its use in industry does not actually leave it vulnerable to an economic downturn, but could actually boost the price by restricting supply. So that's very good. I agree with that. Now I want to flesh that out here. So the reason I'm bringing this up is because I was actually watching the market trade on Friday. And what really gave me pause, we're going to go to this 15-minute because that's going to be the key, but we'll start off with the 1-minute chart. Now this is gold silver overlay brought to you by netdania.com. You can click on the link below. Now this volume is silver's volume, and you can see the massive smackdown. The first thing that any person who is reasonable would say is that you have a massive move at the opening of the financial markets or at the release of some financial news. Now, what would you conclude from that? You would have to conclude one of two things. Either silver is manipulated and they're crushing the price based on certain news stories, or it's a monetary metal because it's reacting to economics. And somebody would say, well, it's an industrial metal. Well, okay. We'll let that sit for a second, and I'm going to prove to you that that's not true. So let's get back to that 30-minute. This is the closest that I could have to the chart I'm going to bring up for you. Actually, I'm sorry, that was 15. And so you can see the tight correlation there. Now you can see what happened from the 15th, 16th through the 18th, stair-stepped up. About the 18th, went flat, stair-stepped up again. The 20th, went flat again, and has stayed flat. Now let's do a comparison here to a futures chart of copper. So this is actually palladium. So let's pull up the copper chart. Now, unfortunately, on NetDania, you don't have copper futures. So that doesn't help to make the comparison. But what I want you to note here is, we'll just go through the metals here. Okay, so we know in this period we had silver and we had gold. This is roughly the same time frame that we're talking about for what we were looking at NetDania. We're looking at the hourly. It goes back to March 12th. So you can see there's gold again and there's silver again. Very tightly correlated in those two charts. Now let's look at copper. So a little bit better, but not really, because you can see the move in copper. We had it happened earlier and we had this huge spike. Do you see that? On March 23rd, we had a massive spike in copper. Go back to gold, it's not there. Go back to silver, it's not there. Now, if we look at platinum, we can see kind of a sideways movement, not really correlated with silver, maybe just a little bit. But then if we look at palladium, we can see, look at that at the end of the day. A massive crash in palladium. Now, why did that happen? Now, I don't think that anybody's going to argue. Maybe some people will argue that palladium is a monetary metal or that palladium is manipulated, but I don't think so. Probably some type of economic news came out. You can see that. A $36 drop, 4.62%, whereas we have silver, 0.99% drop, gold, 0.54%, copper, 1.65% gain. So what's the point of all this? Well, silver isn't correlating with palladium. It's not correlating with copper. It's not correlating with platinum. And you could pull up other charts. Now, I wanted to show you some of the other charts here. These are the Kitco base metal charts. And I'm just going to show you the 24-hour chart so you can see here that if silver was what they say it is, silver would be different and trade in its own market just like these base metals do. So if you look, here's an aluminum chart. Here's the copper chart. Just keep them in mind and compare. Lead, nickel, zinc. Okay, again. So do you see how those charts trade on their own fundamentals? What fundamentals does silver trade on? Silver trades on the fundamentals of economic news. In other words, exactly what he said in this article. The primary and really the only driver of the silver price is investment demand. So all of this stuff about how it's a byproduct, how it's used in industrial uses, how it mimics copper and zinc, you can see from the charts that's just simply not true. There's only two conclusions that you can reach from the price action of silver. I'll say three. The first is either that silver is manipulated, just like gold, or silver is money, just like gold, or silver is both manipulated and money, just like gold. And we'll talk to you next time.